Zillow just came out with some brand new data showing that the US housing market crash is happening much faster than people expected. In this video, I'm going to show you certain cities where in a matter of months, home values have gone down by $50,000, $100,000. I was not expecting home prices to decline so fast in this housing crash. I know I told a lot of you guys expect this housing crash to be slow, but this new data is saying that it's proceeding much faster than we anticipated, specifically in certain housing markets around America, everyone. If we take a look at this map, the metro areas in red, according to Zillow, have declining home values over the last couple months. And I want to be clear about what declining home values means. I don't mean just a couple listings with a price cut. I mean the entire housing market. All of the homes are now valued lower by $50,000 or $100,000. I mean, it's absolute pandemonium in these housing markets in red right now, which are just seeing, we're seeing sellers get desperate. We're seeing buyers drop off the table. And if you want a quicker view here on the housing markets that are dropping the most, take a look here. The areas in red remaining on this map, these are the markets where values have actually gone down over the last 2 months. And if we take a look at this data, there's one housing market in particular that's gone down by more than anywhere else, and that would be San Jose, California. We're going to get into the rest of these cities in this video, but let's start with San Jose, where in the last 2 months, home values are down by an astronomical 8.6%, $150,000 wiped off the table in value for the average San Jose homeowner. And you can see these monthly declines in San Jose. We pretty much have never seen anything like this. Going back 25 years with this data, we can see the 1.5% decline in May, 4.3% decline in June, 4.5% decline in July. These are close to record level declines. As I said in the beginning, this housing crash in San Jose and the other cities I'm going to talk about on this video is happening very, very fast. You can see that if we go back to the last housing crash in San Jose in 2007, it started with smaller value declines, around 1 or 2%. We're going all the way to 4 or 5% per month, which is a huge deal, everyone, because maybe 2 or 3% might not sound like a lot to you, but remember, we're talking about in 1 to 2 months. If you were to multiply 2% by 12 months in a year, you would get 25% declines in value over the course of 12 months. And given how fast these home prices and home values are going down in certain markets, I think by the end of 2022, we could see certain markets down by 20% already. And if you had asked me that question a couple months ago, could a couple housing markets be down by 20% by the end of the year? I'd have said no way. But this housing crash is just happening so fast. The surge in interest rates, the surge in mortgage rates, it's causing buyers to drop out of the market left and right. But as we all know, and as I've talked about, it's not just surging mortgage rates and higher home prices that are causing buyers to drop out. There is now a structural decline in the demand for housing that's going to mean that home prices are going to continue dropping into the future. As well, inventory is going to continue gaining into the future. So let's take a look at inventory here. We're going to keep going with San Jose for a second, just so you can understand what's going on in this market and get your request ready, my channel members. I'm going to be taking your requests in just a couple minutes. So we can see home prices in San Jose are down 4.5% per month. These yellow bars show the inventory. So you can see as the inventory is going up, the home prices are going down. And that makes sense, right? The more homes that are on the market, there's 1,900 homes on the market in San Jose, the more the prices are going to go down. But this is what's interesting, everyone. Pay attention. The inventory in San Jose today is still lower than it was in 2018 and 2019 when there was 2,400 homes on the market. So this is a really interesting thing we're seeing across the US housing market, is that inventory is still low by historical standards in many cities, yet home prices are already dropping by a lot. So very important you guys understand that. I talk a lot about inventory on this channel, and it's a very important metric to see the growth in inventory. However, cities are seeing a crash in values even with inventory 20 or 30% below what it was before the pandemic. So don't get lulled into a false sense of security just because inventory might be low in your market. That doesn't mean prices can't go down. This is a housing market where even in a low inventory environment, home prices are going down in a lot of different markets, and you need to prepare for this. If you're someone looking to buy a house or buy an investment property right now, the market is moving super fast. This data from Zillow, it just came out today, and I'm going to take your requests on it in 1 second. But before we do that, everyone, I want to get back to this map, because we can see a bit of a trend, right? In the metros in red, or kind of translucent, are the ones where home values have gone down. And the ones in blue are where home values are still going up. And you can see very clearly, if we were to draw a line in the middle of America and then go west, the west coast of America is the first one to crash. The west coast is in free fall right now. I've been predicting that on this channel over the last 12 months, and this data from Zillow is verifying that it's happening, particularly in a market like Austin, Texas, everyone. Take a look at this. Home values in just the last 2 months, according to Zillow's raw home value figures, well, the average value is down by $37,000, down by 6% in just 2 months. Now, let's have a little fun. If we were to annualize 6% over a year, times that by 6, Austin's home prices, if they were to continue this decline, would be down by 36% over 12 months. I mean, this is just such a huge drop in prices, and you can see one that Austin's housing market has never seen before. We have 25 years of data here on month-over-month home prices in Austin. You could see minus 3.5% in June, minus 2.7% in July, according to the Zillow data. We've never seen this type of drop in Austin's housing market going back to 1997. These are record level monthly home price drops in Austin. And you can see tied to the inventory, of course. In Austin now, inventory is up to 7,800 units. Again, we're almost back to pre-pandemic levels, but we're not quite there. But that's not stopping home values from crashing in Austin. And so, I don't think a lot of people, especially people who are more bullish on the housing market, I think they don't know what to do right now. They are shocked. A lot of them are still in denial. When I talk to people who are housing market bulls, they're ignoring this data on home values and inventory because they don't want to admit that the housing crash has started, and it's happening even way faster than it was in 2007, 2008, everyone, in these cities specifically. So, as I say always, everyone, pay attention to this real-time data from Zillow and Realtor.com. This is where the truth of the housing market is, telling you in real time that this crash is accelerating and it's getting worse. I mean, take a look at this, everyone. If we go back to this map, we can see these areas in red. Now, to be fair, we got to talk about some of these areas in blue as well. A metro like Miami. This is one where home values are still going up. In Miami, the last 2 months, values are up by 4%. So clearly, not everywhere across America is crashing right now. Southeast Florida is still very hot. Miami is going to be one of the last housing markets to crash. So, why? But let's ask the question, why is Miami still appreciating, and when is it going to start declining, right? Important for you to figure this out if you're someone in Miami, or maybe you're in Richmond, Virginia, where home values are still going up, or maybe you're in Peoria, Illinois, where home values are still going up. Why in Miami are values still going up? Well, again, this is an inventory discussion, right? Take a look in Miami. Inventory a couple years ago, these yellow bars, was over 50,000 homes on the market. Miami's housing market before the pandemic, everyone, was not great. There was lots of inventory, slow sales. You could tell values were actually kind of dipping down in certain months before the pandemic. But today, inventory in Miami's bounced back by quite a bit. But at 21,000 in July, it's still less than half of what it was in 2019, which is why home value growth in Miami, it's decelerating, right? 1.5% in July, but it's still positive. So what I'm predicting in Miami is that when this inventory level gets to 30,000 maybe, that's when I think we're going to really start to see the values trend negative. So important that you guys pay attention to this relationship of how the monthly home prices are moving and then how the inventory levels are moving, everyone. And I'm going to take your requests in just 1 second, but I want to run through a couple more of these markets where home values have declined by quite a bit. We talked about San Jose. We talked about Austin. Third place would be Boulder. Home values in Boulder are down by 5% over the last 2 months. You can tell $41,000 in value wiped off the average home in Boulder in just 2 months. Crazy. San Diego, we see a 4.7% decline. I know I have a lot of you out there in San Diego who watch this channel. It's probably my most requested my most requested market for requests, and you can see $44,000 in 2 months, wiped away. Salt Lake City, 4.6%. San Francisco, 4.6%. Santa Cruz, 4.4%. And then going down the list, you see Provo, Portland, Denver, Reno, Nevada, Visalia, California, Sacramento, Phoenix, and Boise. These are the housing markets that are in absolute free fall right now. So at this point in the video, everyone, I'm going to start to take your requests. So if I haven't covered your city yet, leave a request if you're a channel member, and if you're a subscriber and you want to leave requests, hit that join button below, because I'm going to do a rapid fire round now and run through about 10 different housing markets in rapid succession. Let's take a look at how much the home prices are going down or going up and how they compare to the inventory growth. So let's get your request going here. All right, everyone. Number one request I see is for San Antonio. So let's get into it, everyone. What is the San Antonio housing market looking like in terms of price appreciation? So you can see now in San Antonio, we just had our first month in negative decline. So 0.5% decline in July. I mean, that's not a lot, 0.5% decline, but you can see finally we're in negative territory. San Jose was a market that didn't really crash by too much in the last housing crash, but I think it will have more value declines this time around, especially because the inventory in San Antonio is starting to shoot up. It's up to 6,600 homes on the market. You can see, though, that's still well below what it was in 2019. So we're going to have to add some more inventory to San Antonio before we get some Austin level price declines, but I think that could be on the way. All right, everyone, next request is for Boston, Massachusetts. Let's do some Northeast cities. I get some complaints from people that I don't cover the Northeast enough. We're looking at Boston right here, and you can see we just trended into negative territory. Again, this is Zillow saying the overall value of the housing market for all the homes in the Boston metro is now going negative. This is not just a couple price cuts. This is the overall market going negative. Interestingly, inventory at 6,500 units, still way below what it was in 2018, 2019. So this is another city where inventory has not bounced back yet, but prices are already going down. So get ready for that in this housing market, everyone. We don't need to see inventory return to 2018, 2019 levels to see prices go down. Let's do next. We're going to move down to Florida, everyone. I'm going to jump around in this rapid fire round, going down to Orlando, where we're still seeing positive price growth in Orlando. We just did a 0.5% gain in July, so we're still in positive territory. Now we can see the inventory is creeping up to 6,600 homes on the market in Orlando, 67% year over year. We're at about 30% below what it was in 2019. So I'll give it a couple more months, and I think these Orlando prices are going to start to go down. How about we do next Connecticut? So I get a request for Fairfield County, Connecticut. This would be the Bridgeport, Stamford metro area. And if you want to talk about low inventory, everyone, a low inventory market, this would be Stamford, Bridgeport, Connecticut. I mean, 2,500 homes on the market. Inventory is literally 65% below what it was in 2019. Like, this is amazing. Yet home prices have actually decelerated. They've almost gone negative. So this is another example in Bridgeport of a market that inventory is still so low, yet price action is still going negative. And I'm going to take more of your requests in a second, but I want to talk about why this is. Why are prices decelerating or going down in certain housing markets when inventory in some cases is still 30 to 60% below pre-pandemic levels? Like, that could be a little confusing to some of you out there. Like, shouldn't the inventory have to get back to 2018, 2019 before we see values go down? The answer is no. And the reason is because the demand in the home sales now has crashed. Like, home sales are literally at the same level they were in 2011 right now, pending home sales. So there's way less home sale demand than there was in 2018, which means that inventory doesn't need to get back to that level for prices to start going down. And this is a testament to just how bad and how poor the demand in the US housing market is right now. And I predict it's going to continue to get worse, because as we're seeing through the mortgage application data and through the pending home sale data, this surge in inventory, this decline in prices, it's not bringing buyers back into the market. In fact, it's doing the exact opposite. It's pushing buyers out of the market, because now the mentality is, why should I buy today? I could just wait. I know a lot of you are thinking this. I could wait 3 months 6 months or 12 months, and I know I'm going to get a lower price, and I'm probably going to get a lower mortgage rate. We can see we've hit peak inflation most likely. It's going to be probable that mortgage and interest rates are going to start going down as home prices are going down, as a record number of homes are delivered onto the U.S. housing market. So really, I'm predicting these buyers are going to stay out of the market for at least another 6 months. But all right, everyone, let's get some more requests. What else do we got here? I got a request for Nashville, Tennessee, everyone. So I just covered Nashville is one of the biggest inventory growth markets in America. You can see why. This inventory in a couple months has gone from 1,500 active listings all the way to 5,300 active listings in Nashville. And that growth, which is still, again, below pre-pandemic inventory, has been enough to cause home value growth to drop down to 0.1% month over month. So still positive territory in Nashville, but I predict in the next couple months, Nashville is going to start officially going negative in home value growth. All right, what about Naples, Florida? I know I got a lot of you guys, shout it out. If you're in Southwest Florida, let me know. Because Naples, again, another market, inventory has surged to 2,800 homes, but you can see that's still 70% below 2019 inventory in Naples. So we still have very low inventory. Yet monthly home value growth was only 0.1%. So like in Nashville, inventory is still well below where it was in 2018, but values in Naples, they're about to dip negative. And I think they're going to dip negative in Naples for the foreseeable future, as they will in a market like Northport, Sarasota, Florida. Northport, Sarasota, Florida. We can see actually we are already in negatives. We went down by 0.7% in value in Northport in July. Inventory is up by quite a bit from where it was, still well below where it was in 2019 in Northport. All right, everyone, before I do some more requests, I have a general question here. Someone asked, they're thinking of selling a house, $3,000, and buying a bigger house. Traditional logic says now is a good time to do that. Thoughts? In Boston. Okay, so a lot of you guys are wondering, some of you are waiting to sell your current house, right, before buying your new one. In general, I think that's a good idea. Of course, it depends, on where you live and your finances, but right now, if you could sell into a housing market where prices are still high and get top dollar and then potentially rent for 6 to 12 months. I think that's a pretty good option for a lot of you guys out there. Of course, again, like I said, it depends on your finances and how much you're willing to rent, that is, but I think that could be a pretty good option for some of you out there. All right, let's get back into some requests, everyone. How about Washington, D.C.? Washington, D.C., everyone. This is an interesting market where values for 2 months in a row in D.C. are negative. They went down by 0.5% in July and then went down by 0.3% in June. So we have back-to-back months of value declines in DC. We can see inventory is up to 10,000. That's higher than it was like right before the pandemic started, lower than it was in 2018. But as we've established, everyone, we do not need 2018 levels of inventory to make this housing market crash and make home values go down. Okay, what else do we got? Knoxville, Tennessee. This is a market that's surprising. A lot of you guys are requesting Knoxville, Tennessee. I know some of you are moving there, some of you are buying investment properties there. As you can see, whoa, wow, we had some crazy monthly growth in Knoxville. Look at this, everyone. Woo! 2%, 3%, 3%, 3% per month. Inventory is still very low today. 1,600 homes on the market, well below like 3,900. But we can see values in Knoxville just went down by 0.1%. So Knoxville is now trending officially into negative territory. Not just price cuts. This is the entire value of the market declining. All right, everyone. What else? We got another question, actually. Let's tackle this next question from Atul. He says, what if one doesn't own a house right now? When would be the best time to buy? 3, 6, 9 months from now in Northern California? And, this is a great question, everyone, because I think some of you are excited by the fact that the housing market is crashing. But then again, a lot of you have waited a long time to buy a house. So when should you plan to buy? And I think you got to make a decision. If you're asking yourself that question right now, it's like, how much do you want to ride out this housing crash? Because I'm predicting this housing crash is going to last years and values are going to continue to go down over the course of 6, 12, 18, 24 months, right? You got to ask yourself the question, do you want to try to get in at the bottom and time the market to get in the bottom, or do you just want to wait for your dream home? I want you to think in those terms. Look for your dream home at a realistic budget. If you can find your dream home today at a realistic budget, I would understand if some of you would buy, right? Because if you buy your dream house, You might not care over the next year to 2 years if values go down by 15 to 20% because you're going to live in it. But of course, I'm sure a lot of you would care if you bought a house and values proceeded to go down by another 15 to 20%. So this is really not so much something I can make an exact recommendation on. You just have to decide for yourself. Do you value more like finally being able to buy a house and buy your dream home? Or do you value more getting a good price? Because these prices, they're going to continue to go down, everyone. And this is what I think a lot of people in the housing market haven't gotten into their head. When I look at what a lot of housing market bulls and mainstream narratives say, is like they're calling this a dip, they're calling this like a slight reset. They haven't understood yet that we're at the end of a decade-long bull run in the US housing market where home prices adjusted for inflation are at the highest level they have ever been in America. Home buyer affordability is near the worst level it's ever been in America, just as we're walking into a recession, just as the Fed is hiking interest rates, and just as different parts of the economy are collapsing, like the tech industry. So these home prices, they're going to continue to go down. Inventory is going to continue to go up. And oh, by the way, my video coming out Monday is going to be about foreclosures. There is a major foreclosure backlog coming and hitting the US housing market. Millions of foreclosures over the next couple of years, which is going to cause inventory to go up even more and prices to go down even more. So make sure to watch that video on Monday on foreclosures. I know I've been teasing it a lot. Make sure you're a subscriber so you don't miss that video. Let's get into a couple more requests, everyone. Again, if you want to make requests, hit join as a channel member to do that, everyone. What else do we got here? Reno, Nevada. Let's look at Reno, Nevada, and let's look at it on a map here so we can take a look at a zoomed out version here. Reno, Nevada, everyone. You can see in the last 2 months, home values have gone down by 3.1%. They're down by $18,000 on average for the typical homeowner. So you can tell Reno's getting hit pretty hard right now, just as most of these areas around Reno are getting hit hard. And I got another request for Salt Lake City, so let's go to Salt Lake. This is a market that's in free fall. Salt Lake City, 4.6% decline according to Zillow in the last 2 months on their raw home value data, minus 29,000. Imagine being like a recent home buyer in Salt Lake who bought, say, 3 or 4 months ago, and now you're taking a look and you're seeing your values 30,000 less than what you bought it at 3 or 4 months ago. Especially if someone bought with an FHA loan, that's a big problem. I got a request for Vegas. Blake Riley. So we can see Vegas is down only by 0.8% over the last 2 months, but Vegas is in free fall. Blake, here's why. Here's why Vegas is in free fall. Because if we take a look at not just the prices but the inventory, it's scary. I mean, take a look. I mean, whew. Inventory in July in Vegas, 9,200 homes on the market. This is a city which is now at or above its 2018, 2019 levels of inventory. So I predict these home prices in Vegas, they're going to continue going down. They were down by 1.4% in July. We're having a lot of investors sell out of the Vegas housing market. We're going to have a huge amount of foreclosures in Vegas, given the high share of FHA loans. This is a market that's going to just get way cheaper. We're seeing rents go down. Rents actually went down in Vegas, and I actually just want to touch upon that real quick. Also, in this Zillow report, they announce rental rate data each month, and this is the first month I saw a lot of cities had rent go down in July as well. Phoenix, Vegas, Northport, Sarasota, Florida. This rental crash that I've been predicting, we're starting to see the rents go down, which throws a whole other wrench in this housing market, right? Because I think some people were saying, well, okay, it's one thing if values decline, but at least, I could rent my investment property out, or at least maybe I could avoid having to pay more in rent. Well, rents now are going to start to go down in America throughout the second half of 2022, and that's going to throw a major curveball to the US housing market, which is going to cause values to go down by even more. All right, we actually got a request, everyone. Someone asked, what's bad about an FHA loan? So actually, before I get into more of your requests, it's a good one. What's bad about an FHA loan? Well, there's nothing bad about an FHA loan. But the thing is, FHA loans typically only have about 3 to 5% down payments, and the credit scores are lower and the debt to income ratios are higher, which means way higher default risk. If you look at the default rate on FHA loans, I'm going to talk more about this in my foreclosure video on Monday. Default rate on FHA loans is like 3 times higher than a normal conforming mortgage from Fannie Mae. So if you target, if you look at the cities and the neighborhoods with the highest share of FHA loans, stimulating the housing market, those are going to be the ones that have the most foreclosures and then the biggest declines in home values over the long run. So that was a great question on FHA loans. All right, everyone, we got a request now for Bakersfield, California. Let's do some Bakersfield, California action. I'm actually going to move myself over to the bottom right of the screen here. Bakersfield, we can actually see, it's a little blue spot. Home values in Bakersfield have gone up by 0.3%. You can see it's like the one market in California that hasn't really declined yet. If we look around, Riverside's down, San Diego's down, LA's down, Visalia's down, San Jose's down, Stockton's down, Sacramento's down. But yeah, Bakersfield is still up. I don't think that's going to last for too long though. Bakersfield's a market that has a lot of foreclosure risk. Its economy is not very strong, very high unemployment rate. So I don't think Bakersfield's a market that's going to survive this crash. I expect home values to start going down there pretty soon. All right, everyone. What else? A couple more requests before I get to some more questions. Maryland. People are asking for Maryland. So, if we zoom in on Maryland, this is an interesting one because we got a couple metro areas here that are combining with each other. So let's take a look. One of them is DC. So you can see like the DC metro includes like a lot of Maryland. Home values in DC are down by 0.8% over the last month. In Baltimore, they're up by 0.5%. So kind of like, the average of these two for Maryland more generally is what you could expect. I don't think these markets are going to have, let's say, a big crash necessarily, but I think there's going to be a correction, and that correction is going to start very, very soon in places like Baltimore and Washington, D.C. All right, everyone. We got a request for Boise, Idaho. How have I not covered Boise, Idaho yet? It's probably the #1 housing market I like to talk about. Interestingly, I have not been to Boise. I think I need to book a trip there, given how much I talk about it. So we're looking at Boise now, and the big thing I talked about in my last video was inventory in Boise is now above, according to Realtor.com, Realtor.com's listing database, inventory in Boise is now above where it was anywhere in the last 5 years. It's the only market I think can speak to that and have that claim, where inventory is above where it was in 2016. The result is that home values in Boise, they went down 2.5% month over month. Now, pay attention to this, everyone. Home values have actually kind of been like trending down in Boise now for almost a year. You can see in September they started going down, in November they went down, then they had a surge back up in January. So Boise's a market that's already been wobbling now for a year, and it's already and it's going into a full-scale crash because these inventory levels, they're going to keep growing. Boise, Idaho, get ready for 40% declines. All right, what else do we got? What other requests? Tucson, Arizona. Let's do Tucson, Arizona. I got time for about 3 more requests, everyone, so get those ready. Tucson, Arizona. Now this is a really interesting one because again, inventory in Tucson, 1,900 homes on the market, right? We're about 2 hours south of Phoenix here in Tucson. Still half where it was in 2017, yet values just went down by 1.2% in July. So Tucson is not the biggest value decline, but it is in negative territory at this point. So, I think this is a market that, like Phoenix, if we go to the map here, and just actually isolate the markets where home values have gone down, especially look at this cluster here in the Southwest, it's Flagstaff, Phoenix, San Diego, Tucson would be right there. This is an area in general that's declining, and I would stay away from buying in these locations, everyone. All right, I got time for 3 more requests, but I want to answer a question first. We got a question about how long is the Fed going to continue increasing interest rates? And that's a great question. This has been a hotly debated topic because we can see clearly that there's reports, peak inflation seems to have come and gone, right? The CPI data for July showed it was flat month over month, even though it was still 8.5% year over year. So what's the Fed going to do with interest rates? Well, my prediction is they're going to keep hiking interest rates through the end of 2022, because as I've shown you guys before on this channel, for me the relationship that I'm looking at is between the year-over-year inflation rate and the unemployment rate in America. So right now, year-over-year inflation is 8.5%, unemployment is 3.5%. Which, when the Fed looks at that, those are their 2 mandates: full employment, price stability. We have not achieved price stability, even with the most recent month of a decline in inflation. So the Fed's going to continue hiking until that year-over-year inflation rate, I think, gets down to closer to where that unemployment rate is. Now, Here's the thing, the Fed can hike short-term interest rates, but that might not cause mortgage rates to go up, as mortgage rates are influenced by long-term interest rates, like the 10-year US Treasury. And right now we have an inverted yield curve where the short-term interest rates are higher than the long-term interest rates. So there's a possibility, say the Fed hikes by 50 basis points at their meeting in September, we could just continue to see the short-term rates go up, but the long-term rates stay the same or maybe even go down, which could cause mortgage rates to go down. And not to be long-winded about this, but the overall takeaway here is the Fed's hiking interest rates. We have an inverted yield curve. We have a recession on our hands, everyone. So I think the bigger thing to be worried about is the broader recession that's coming and that's causing home buyers to drop out of the market to go along with higher short-term interest rates. So the next 3 to 6 months, I don't think too much is going to change in terms of, like how expensive it is to buy a house in terms of mortgage and interest rates as prices go down. All right, everyone, let's get last couple requests in here. Houston, we got a request for Houston. All right, let's take a look. Let's take a look at what Houston looks like, everyone. Houston, do we have a problem? Well, you can see values in Houston are up by 1% over the last 2 months. So Houston has kind of been a more resilient housing market. It's oil-based, so kind of the boom in oil has created some jobs there. But I think Houston is starting to decline. If we take a look at the inventory data versus the home value data in Houston. So let's just take a look at that real quick. And I have time for 2 more requests after this. So we can see inventory in Houston's up to 1,800 homes, still below where it was in 2019, but we're almost in the negatives in Houston's housing market in terms of month-over-month growth. So, this is a housing market. I don't think it's going to crash too hard. It's more fundamentally supported than Dallas and Austin, but Houston's a market that's clearly in decline or deceleration at the very least. All right, everyone, we got a request for Seattle. Let's do Seattle, everyone. Oh boy, this is going to be a scary one. Ooh, all right. So this is actually kind of interesting. So inventory in Seattle is up to 7,200 homes, which is pretty high. I mean, you can see it's a little bit below where it was in 2018, but over the last 6 years, this is a high inventory level in Seattle. Interestingly, prices dropped by a lot in May, and then in June and July they've gone down, but actually the amount they've gone down has decreased. So, Seattle's a market where home values are in decline. I'm interested to see, is it going to stay around this? Is it going to lurch back up? I think it's going to go back down because this inventory is piling up on the Seattle housing market. What about Chicago? How about Chicago, everyone? Before we do our last one, let's do Chicago. Chicago's second to last, then we're going to do our final one. Chicago home values actually went negative. They went negative in July, which surprised me. Because inventory in Chicago is still very low, still about 50% below pre-pandemic. In and of itself, that doesn't mean values couldn't go down, but home prices in Chicago are still pretty affordable. Like you can see, the typical home value is $314,000, but it's clearly going negative. So Chicago's housing market is entering a correction. I don't think it's going to crash per se. Although one very interesting thing is that the Midwest and Northeast, despite me talking about the fact that the inventory is still very low there, we are starting to see, price declines, right? We talked about Chicago, Milwaukee values went down a little bit, Worcester values went down by 1.5%, in Trenton, New Jersey values went down by 0.7%, Pittsburgh values went down. So we're seeing a little bit of softness now show up in the Midwest. Minneapolis is down by 1.1%. So, very interesting to see that these Midwest and Northeast markets have very low inventory, but prices are already starting to go down, everyone. All right, everyone, let's get this last request in. And if I missed your request, everyone, and you're a channel member, leave a comment in the video, like under the video after it posts. Leave a comment with your request, and I'll get to it after the fact. And if you're a subscriber who wants to participate in these live streams in the future, hit the join button below. You also get access to interactive graphs. I just came out with my members-only newsletter today. If you're a channel member, check the community board. There's a link to the newsletter on foreclosures. There's some crazy data on just how many foreclosures are backlogged in America right now. Next 12 months, this is going to be the story everyone's talking about, this foreclosure deluge. But finally, let's finish things off here with Charlotte, North Carolina, everyone. Let's do Charlotte, North Carolina. Where are we here? Charlotte. Okay. Interesting. My color coding got a little messed up here. But okay, inventory in Charlotte's up to 5,000 homes on the market. So big increase in Charlotte over the last couple of months. Still pretty far below where it was in 2019. Prices in Charlotte it went up by 0.3% month over month. So we're seeing in Charlotte, you know, a softening in the housing market, but it's really Raleigh, North Carolina, where values are going down, which you can see they're down by 2% over the last 2 months in Raleigh. So, you know, it's the West Coast crashing, it's some Midwest cities starting to correct, and then Raleigh, North Carolina is like the only city in the Southeast where values have actually gone down, everyone. So that does it for today, everyone. Like I said, hit the join button below, become a channel member. Cost is $5 a month if you want to participate in these members-only live streams. And everyone, make sure to watch my video on Monday on foreclosures. You're not going to want to miss this. The data I uncovered on how many foreclosures are coming in the U.S. housing market, it's like unbelievable how bad the lending standards have become. You're not going to want to miss this video. So until then, everyone, this is Nick from Reventure Consulting, signing off.